James, good morning to you. Better than expected number, at least on the top line. But there are a lot of questions people have about what's going on behind the scenes. I know your operating margins were higher than they had been in the year-ago quarter. What happened? What are you dealing with on the plus side? What are some of the headwinds you're facing right now?
Yeah, sure. Morning. We had a good finish to the year. Our momentum that we generated in the year carried through into the fourth quarter. We like our reinvestment in increased marketing, in increased innovation, increased execution. So that was really driving the business. Yes, in the fourth quarter, of course, we still have the suspension of our business in Russia, and there were mobility-related restrictions in some countries, particularly China, in the fourth quarter. But we were able to continue our momentum despite that. So we were very pleased with the year. Obviously, as we look into 23, we're going to see some deceleration, a moderation in the macros, but we're confident that the momentum we've generated will carry us through, and we'll have another strong year.
What are you seeing so far this year? Is China opening up, and does that make a difference?
Yeah, we see China opening up. It makes a difference. China's an important market for us. The release in the restrictions obviously did generate a wave of COVID infections. But if you look at domestic travel and domestic activity in the beginning of the year in China, many features got back to 2019 levels, not necessarily all of them, but a big bounce back, not unlike what happened in the US and Europe once the restrictions came off. So we think there's a very similar trend going to play out in China, and it'll be much more normalized by the time we get into the second quarter and beyond into the rest of the year. So we see that playing out in the coming weeks, and therefore we've had a good start to the year. Ultimately, at the highest level, our momentum from last year has carried through so far into January this year. So despite all the pluses and minuses out there in the world, our strategy has allowed us to carry that momentum and that confidence forward so far into 2023.
Coca-Cola HBC, which is the Switzerland headquartered company that you guys own a 20% stake in, was out with its earnings earlier today, too. And it said that it's going to have to increase prices this year to tackle some higher costs. Are you seeing some of those same pressures?
Yes, there's still a number of cost pressures out there, particularly in some parts of the world, whether they be inflationary emerging markets like Argentina, like Turkey, or some of the developed markets like Europe. There are still inflationary pressures from cost and wages out there. Having said that, we do see that inflation is likely to moderate as we go through the year, and therefore we expect the rate at which prices are going to increase is going to start to moderate and become a bit more normal by the end of the year. But there certainly is some pressure in the system at the beginning of the year.
You guys had raised prices last year, too. That's part of the reason that your margins look so good at this point. Did you see any pushback from consumers? Is there hesitancy to buy? What do you think just how the consumer's feeling? Because we keep hearing that we're headed for a downturn.
Yeah, I think the consumer generally is quite resilient. The price increases have been passed through. Of course, offsetting the price increases, there has been a tremendous amount of stimulus injected into the economies in one way, shape, or form around the world. And that money is sitting out there with consumers, and wages, too, have been going up at a slightly higher rate than historic, although not as fast as inflation. So on one hand, prices have been going up, but the other hand, there is money in the consumer's pocket going in to their bank accounts. I think everyone expects that to start being depleted through the year, but also in parallel to see wages continue to grow and inflation come down. So there is a scenario of a gently softening economy that runs in parallel. Having said that, clearly the lower income consumers are under pressure, and depending which industry and which category you're in, you're seeing some down trading and downsizing. We can see that in categories like water and some of the juice categories. But overall for us, we've maintained strong strength in our business because we believe that if we invest in the marketing, innovation, in affordability on our core brands, getting the right package and price point, we can continue to keep consumers in our franchise, and that's what's happened so far.
Well, let's talk about that marketing budget. You are talking about spending more, but you didn't have an ad in the Super Bowl this year. Pepsi did. And I don't think you're advertising anymore or marketing anymore on Twitter. So if you're spending more, where are those dollars going? Where do you think you're getting the most bang for your buck?
We've certainly continued to spend our marketing money across a broad range of channels. We use virtually all types of media.